Good morning, guys. Welcome to this Tuesday, January 6th. And we are still just kind of sitting in a holding pattern. Beginning of the year, it didn't start with much of any direction at all. We're still holding up against the highs. And maybe we had Friday's trading also to the downside. Yesterday, we had a nice little up day. Just didn't go very far. Just kind of run up to the upper edge of the range and stalled and then sitting there. And the overnight has been much of the same. Now, the news we have hitting this morning is pretty much non-existent. 9:45, we get the PMI composite number come out. That's about it. Tomorrow, though, we get a little bit more ADP report, factory orders, ISM services index. When on Thursday, jobless claims, productivity, wholesale inventories. Friday, employment situation, and that's going to be the big one, I guess. So it's the market may be waiting on, holding on to see how those employment number comes out. But right now, we are right up here against the highs again. We're not far away from making new highs, and the market is just sitting here in a holding pattern. And I would say that this move out of the middle, which started off with this little Santa rally we had a couple of the drifty day to the downside after the first 3-4 days of a little bit of rallying going on going into Christmas. Since then, it's been just pretty much been grinding downside movements, been a little bit of retracement after that. So we're back to exactly where we were, building value, and I would just start off this market flat out range bound. Range bound on the capital flow, we're leaning long. On the exchange member chart, we are range bound. So that's kind of the starting point. So basically, look to buy weakness, sell strength, look for potential breakout scenarios, and let's see. At one point, we're going to get a risk off day or risk on day, depending on what the news is or what happens. But right now, I'm just thinking range bound trading. Let's see if they want to try to take this higher or not. And this kind of the expectation is they're going to try to knock on the highs here and try to make something out of it. So I'm looking to buy weakness initially. I was going to put an edge, and this is a little bit crowded right now. I'm going to put an edge right here at the 69, 69, 40. It's getting freaking crowded there. So, I mean, I kind of left it out. The other option is to really do this, drag this guy down a little bit like that. So I'm probably going to leave it like this instead. Yeah, let me do this instead because I've been going back and forth with this little edge here this morning, and I can't quite make it the way I want it. It's just too tight, too much stuff crowded on top of each other. If I do this, like so, all right, when I'm capturing now, it's the lower end of these distributions. You see those? The distribution down here from before. Here it is a day session low. Here we have a day session high. Here we have the overnight high. So this edge has a little bit more to go for it. But then it's missing a few things in between here. But I think I'm going to leave it like this instead. So looking to buy weakness against the 69.40s, 69.30s, 69.20s for rotation, 20.25s for rotations back up again. Probably down to 69.10 and 6900 as well. I would say below these two support areas, the 6900, 6890s, that's when you have to start worrying about the short side potentially starting to take hold of the bears, really starting to make a number on us. On the way up, looking to sell strength against the 69.55s, the 60s, 70s, 80s, 90s for rotations back down. If they start taking out this area, the 69.60s, I would be more inclined to start thinking long side of the market. Still looking for shorts against these upper levels, but we may have a little bit of a directional move going here. On the way down, I'm going to give it a little bit more room because we have most of the action to the downside. We haven't been up here since Christmas and Christmas Eve, Christmas Day. That's where this low volume rally to the upside happened. And the question is really where we go from here because as you can see, this is Friday's trading, Thursday's trading after Christmas. So I have a couple of down days after that where they cut off the buying and then now they kind of rocked it down here, cut off the selling at 68.70s. And now we are back up in the range again. So we are pretty much range bound by definition. Capital flow is leaning towards the long side. Exchange member chart is range bound. And I would just trade it as such. Now, initially, I would just focus on the narrow range or the The range is close by. So 69.30s, 69.20, 20 to 25, 69.40s, these three support areas. Looking to sell strength against the 50s, the 60s, and the 70s. So that's the close range we are looking at. And if they start trading outside of that, we may have a directional move. I would still look to buy against the 69.10s. Yeah, 69.10s, 6900s, 68.90s for rotations back up. And I will still look for short setups against the 69.70s, 80s, and 90s. Maybe if I'm going to find a hit that 7,000 mark at one point here, but we are pretty darn close. But a lot of the times we see that market just gives you right up to that level and you never get it, and then they knock it down for a while. So anything can happen. So anyway, so that's how we get started this morning. In a holding pattern. People are getting back from Christmas, first few days of January. Let's see how this whole thing goes. On the NASDAQ. On the NASDAQ, we are still building value in this range. This is a prior high volume area. We are right back to it. And we traded up a little bit into that Christmas Santa rally, and then we got knocked back down again to this tractor point here, the 25,600s. We are pretty close to getting into that high volume area where we really can make not high volume, but to the new highs area where we can really start to maybe even make a new high here. But they had the key edge right now on the NASDAQ is going to be that it's at 850 to 900, this upper edge. If that comes out, that's when we have a shot at it. Right now, that's been defended. We have not been able to crack it. Been up here for a little bit, just right about it and right above it, but every time they get there, they get kind of knocked down. So on the NASDAQ, looking to buy weakness against that 540 edge, 540 to 50 edge, the 500 edge, the 460s for rotations up. Looking for short setups against the 640s. Actually, we're trading there right now against the 690s, 730s up to the 790s to 800s for rotations down. I would say above that 800s, we're going to be leaning in on the long side. I think we have a shot at maybe cracking it. That's that upper edge, the 800 to 8 to 900s. That's what that volume edge, or yeah, both volume and time edge right there. So this is a key area, the 790 to 800. So you can start cracking that. I think we may be starting to think about the long side. And on the way down, it will start taking out these lows at the 400s. I will start thinking about the short side. Still looking to buy against these lower areas, the 300s and the 260, just a lot less aggressively. So that's the NASDAQ. So range bound, looking to buy against that 550s, the 500s, 450s down to the 400s. We're going to sell strength. 640 would be aggressive, but 680s, 730s up to that 800 level for rotations down again. That's the NASDAQ. Still, both of them flat out range bound. On the NASDAQ, the capital flow is to the upside. As you can see, this is capital flow. It is to the upside. We have been trading up here for a bit. A bit is pretty much stalled. If anything, I would favor the long side on capital flow when it comes to NASDAQ, but it is running out of gas, that's for sure. So it's need a little bit of a burst of some sort for this to kick in. And then finally, bonds. I was going to say oil and gold, but I meant to say bonds. The bond market back in here is trading in a tight range. Has been doing it for a long time now, and we are back to the same thing. I was impatient yesterday. I gave out my little profit target, but you can see here when they traded up here, they were trading up in this upper range for the longest time yesterday. And I was sitting here in that trade. I was 2 ticks off the low 14s is what I was short at. And I was fading heat up to that 16 level. So I scratched it after a while. Then, of course, maybe 15, 20 minutes later, they took it all the way down to 10. And that was the second single print. And that's where I had my profit target. But I'd canceled that already. So, I got out of that position. But they got down there late, like a half hour later, and then after that, and you can't just sit here be complacent, even if it's moving super slow on the bonds. You get down there later after that, they had a little rally. They took it out here, took out the highs, and all the way up to the 15, 19s. So that would have been a stop out. It would have been a loss if you had sat in that thing thinking that this was the high of the day and they can't do anything about it. So it is something you had to watch. It's just moving super slow, but fade edges back to the mean. We are still range bound, so I would look to buy weakness against the 1506. That's pretty aggressive against the 1430s. We're going to sell strength against 1510s, 1518s up to that level, 1526s for rotations back down. So that's that's what we're looking at to get started with on the bonds. And the setups we're looking for there is very specific. You're looking for something like this: 1, 2, 3 bars, not move, not able to take it higher. Then you have a shot at potential failure. And sometimes you get it pulled back like that, and they come back and retest it. That would be an even better setup. But it's those those are the higher probability setups you get, and they may not always work, but they have a pretty high probability of at least giving you a few ticks or a shot at scratching your trade. So you had to be patient. You had to wait for them. Trading these two bars, like bars like this, it's not very high probability. It's a retest. But more than often they just take out this level, and you won't know because you're basically stepping in front of the edge, and usually you have to get in on that first bar because the second bar doesn't have enough volume on it. So that's I stopped trying to trade those, but you see that's how the market they look very ominous or very obvious when you look at it after the fact. It's just more than often you have setups on the way. You can just look at these setups on the way up here, but it didn't work, right? And you can't just look at that last setup which worked. It's easy to do it that way, but that's if you look at the bar formation on the way up and down, you have several bars with the exact same thing occurs, but it doesn't work. So you want to have that extra security, that extra level of certainty on your trade. But I found that these setups, when they run up towards an edge, they need to be at an edge at the level, so ideal level, and you have two, 3 bar or 3 bars like this, not cracking the or extending the range, then you have a shot at trying to get in. And sometimes you miss it. Sometimes you get lucky and get in lucky, but sometimes you get that extra little burst of activity and manage to get short on it. So anyway, or short or long, depending on what the side is you're trading on. But anyway, so that's the little bit on the bonds. So there've been patience on that one has been pretty much has been paying off on the bonds. Anyway, so back to the ES. So we range bound across the board. I would favor the long side on the ES to get started, just because we traded up in the range. But capital flow on both the ES and NASDAQ are pointed higher. Exchange mirror charts are pretty much range bound. So that's how we get into the trading days. All right. So that's how we get started. So I'll wrap it there for now, and I will see you guys back at 11:30 for the next update. Ready, guys? Later.